Thank you. My name is Maureen, and I work for the Co-op Clinic for the U.S. Federation of Worker Co-ops. This webinar is being presented by Dowie and the Federation. Next slide, please. I don't know if you know that Dowie and the Federation work together. Dowie is the Democracy at Work Institute. Its mission is to expand the worker cooperative model to meet the needs of workers locked out of good jobs and ownership opportunities, especially BIPOC, recent immigrant, and low-wage workforces. Today we have Toy Cooper here from Dowie, and we are going to share this with everybody who belongs to the Dowie and the USFWC network, because we want everybody to have access to this very vital resource. And now we're going to present who we are as the Federation. You probably already know that we are the U.S. Federation of Worker Cooperatives, the only national grassroots membership organizations for worker cooperatives in the United States. Our mission is to build a thriving cooperative movement of stable, empowering jobs through worker ownership. We advance worker-owned, managed, and governed workplaces through cooperative education, advocacy, and development. And as I mentioned, I am a part of the Co-op Clinic together with Matt Feinstein and other colleagues who are here. And from the Federation, the Co-op Clinic is a resource for the co-op movement. We have a network of advisors who are cooperators and experts who provide information and support to members of the Federation. Danny is one of the members of our support network. And if you can contact the Co-op Clinic to as one of your benefits of membership, training, and technical assistance. So since time is going on and we know a lot of you have a lot of questions, I am going to pass the floor to Danny Pressler. I know you're all going to have a lot of questions during this session, so please save your questions until the end. You can use the chat if you have anything urgent. And we are going to be sending the recording of this webinar to the email that you provided when you registered. So you don't need to take too many notes. So we want to thank the Federation and Dowie's teams. And again, as usual, we want to thank Danny Pressler for her support to LLC co-ops and the Co-op Federation. Thank you. Welcome, y'all. I'm going to share my screen. Hang on a sec. Let's see if I got this right. Can you see my beautiful photo? Oh, right. A lot of you already know who I am. A lot of us have seen each other in different community spaces. I'm originally from Chile. I'm a mom of an adult, a young adult who's 22. I am a co-op development consultant. I've been doing this since 2017. I've been in different spaces. I've been on the Federation board for a while. I began working with co-ops when I joined a cleaning co-op in San Francisco in 2013, where I was for 7 years. And then through my consulting work, we began to develop Colmenar Co-op that provides consulting services to co-ops, small businesses, and democratic workplaces, along with technical assistance to startups, to co-ops that want to grow, that are developing. And we work on governance, conflict resolution, different areas, and also finances, of course. I'm one of the technical assistance providers to the Federation from Colmenar. And I am currently also working in Sure Cabinet Cooperative. I'm a credit agent. I'm a loan officer in a credit union. I work on facilitation of these kinds of webinars. Here is our agenda for this afternoon. I'm very happy to be here with you. I think we've been doing this yearly now for several years, providing these resources in Spanish. I do a lot of financial co-op technical assistance with Lisette. I'm going to talk a little bit about what the business documents you need as an LLC, worker owner, or co-op to begin the whole tax return process, and what the whole process is for presenting your returns, as well as the process for individual tax returns. And at the end, there will be time for questions and answers with Maureen. I do want to give a disclaimer. I'm an accountant. I'm not an accountant and I'm not an attorney. So this presentation is for informational purposes only and not for the purpose of providing legal or accounting assistance. For tax return preparation, you should find someone who is qualified to do so, either a professional tax preparer, a bookkeeper, an accountant. Accountants help with the legal side of things. Attorneys help with the legal side. And so what we're going to talk about today is getting ready for that point of turning everything over to the professional who will actually prepare the returns. So the tax returns. So in the chat, put a little reaction in the chat when then about how you would react when we talk about tax returns. So thumbs up and meh, a little heart. I want to learn. I want to understand. And then we've got some faces here like, uh-oh. I just want to kind of take the temperature of the group here to see how you feel about talking about these things. Oh my goodness. Great. Upside down faces, everything. Oh, I did see a heart. Uh, thumbs up. Great. More or less. Thank you so much for sharing how you feel with this type of information. So beginning with the tax returns, we're going to start with the business side, your LLC co-op. What documents you need, the structure, process, and the important dates that we need to know, and steps and decisions that need to be made. The business structure of an LLC. I know there's different states here, and some things may be different depending what state you're in. I'm in Oakland, California, and things are different in different states. But LLCs are pretty similar among states, but there can be some details that are different, and I'll mention them. And you can look the information up on the internet or ask your tax preparer what the actual rules are in your state. The most important documents that we need to know about for an LLC are the articles of incorporation or the articles of organization. When we started the LLC, or excuse me, the most important documents, thank you. Oh my goodness, it's really hard to ask a Chilean to slow down, but I will do what I can. But the most important documents that we need to have on hand are the articles of incorporation or the articles of organization, which also includes the application or the form that we fill out when we register as an LLC with the Secretary of State, or which may have another name depending on your state, but this is a government office that is established in each state with regard to taxes. We need to make sure that we check off that that you belong to an LLC that is run by its members. It's not run by a manager. So the articles of incorporation has to explain that the business is run by the membership and follows co-op values. It is a workers' co-op. And we also, in this document, explain who we are, what we do, and who the membership is. And this document needs to be up to date. If you have any updates, you need to present the updates to the Secretary of State or whatever office it is in the government. You usually do have to present this document when you register the business, when you open a bank account, when you do other legal processes, then who we are, how we govern the organization, how we pay taxes. For example, there's different kinds of co-op businesses. You need to spell out the framework of how you run the co-op as a co-op. And this operations agreement, which is separate from the articles of organization, the operations agreement is also used, also has to discuss what it gets done with any kind of profits and losses, if there were to be any. And it needs to be approved by professionals such as an attorney. The law for LLCs is the law in charge. We also will have a policies manual and a membership manual. So in terms of the hierarchy, you have to follow the LLC law and the articles of organization, the operations agreement, etc. But we also have the policies manual, which contains most of the information in detail of the agreements that we make. Oh, it is the details of the policies in the operations agreement, the dates, deadlines, etc. These can be changed more easily and updated. We might have a committee at one point and then it stops operating. And so it's easier to change those kinds of things, for example.
On the other hand, the operations agreement has to be, we need to do a final revision by a lawyer, professional lawyer, and we have to have them more general agreements, and then we put the details in the policies. So we need those two documents, and the person who prepares documents needs them to be able to determine the profit allocation, what decisions they have to make based on that, to be able to work with all of you in terms of the deadlines that you have established, or that with the person who you've delegated for this process. So another important thing that we need to understand is in terms of the finances of our cooperative. So before we work with a professional that works on this, okay, I'm going. So we need to understand the finances of the business, because this is where we start. An LLC, this type of legal structure has a fiscal year from January 1st through December 31st. This fiscal year means that when we finish on December 31st, as in a different way than corporations, the funds have to be distributed. They don't stay with the LLC. They, we have the capital accounts, but that's not cash that belongs to the business. It's not part of the cash flow. So we need to be able to close the books on December 31st and understand how it's distributed, how they're assigned, if there were net profits, and where we allocate the losses as well. And I always recommend that you use some program, an accounting software. Maybe at the beginning, you do it in an Excel spreadsheet, and you can work with this professional to help you to do this type of report. But we're going to have to understand the balance sheet, which explains basically how much we own, how much we owe, and how much we have accumulated, or how much is owed to us. So that's an important document. And also the profit and loss statement is the documented of the 12 month that shows how much money came in and how much money was expended by the cooperative. Then we have to know as well how our capital accounts are, and these are expressed in the balance sheet. And that's where we're going to see how much we've been accumulating over time, what has been the result of profit distribution over the years, and also the initial capital contribution that we made when we started the cooperative, and if we've done an additional allocation of capital. And that's where we're also going to reflect our reserve funds. Any funds that we keep helps us to strengthen the business reserve. And if nobody has paid us and we don't have enough funds to pay, we have additional funds in the reserve capital to be able to support ourselves in those moments. And then the business is able to recuperate and receive the funding. And then those accounts are reestablish or replenish. It's not like there's money taken out that doesn't come back. And also the what we have in our capital accounts, we make distributions. And for that, it's important to have a policy regarding the funds in terms of accumulating certain number of years of profit to have at least 6 months of business expenses to be able to have it within our business as a reserve fund and to be able to distribute every year or every 2 years or 3 years, make distributions to the members in terms of those uh, profits. Whenever we have profits that has the names, we distribute it, we assign it in the capital accounts according to the operating agreement. So how do cooperatives pay taxes? In LLCs, what we have is a percentage or is a transfer, a pass through. We have the pass through, which is what it's determined in English. And that this term basically means that we transfer the profits or to the members. So who pay these? The the different uh, income through that the business had, and you subtract the expenses, and this pays the different. Uh, you'd make the distribution through these forms that are the K1 forms that are for each member. The cooperative, depending on the state, may pay an annual fee as an LLC. So, for example, in California, it's $800 that are paid every year, and it's not like a tax. It's paid at the beginning of the year. So, in other words, I'm gonna pay right now the $800 that I need to pay for the year 2025, and these accumulate. So what we do have is payment ranges. So for the example of California, between zero and $250,000 in income, you pay $800. If you're in the next range of $250,000 to $500,000, you pay 900 in addition to the 800. So there's a different scale. There are states where you don't pay this, but they have some other rates that have to be paid that the business or the LLC has to pay to be registered. What we call uh, the income tax is paid by the members, and that's paid as a pass-through. So a K1 is important. There's some LLC cooperatives that can pay taxes as corporations that also exist, but we have to take into account that if the cooperative is a mixed cooperative, where we have social security, members who have social security and members who have ITIN, which is another identification for tax purposes for foreigners, we then have to take into account that they would not be able to uh, file taxes as a corporation because they're going to receive a W-2, which requires a work permit. So the pass-through is convenient for cooperatives that are mixed in terms of migratory status. Now we're going to talk about the tax structure. So the LLC presents an information return where it's going to report to the IRS what are the different types of income that it had, what are the deductions that it had from expenses. It's also going to report what are the gains and losses and also the assignation or the allocation that's made to each member through the K1 forms. So the form that the LLC fills out is a 1065 form, and the deadline to be able to present these with the professionals that are supporting you is March 15th of every year. And you can request an extension of 6 months. The cooperative may do so. It can be that people may have not received the ITIN, and in that case, a cooperative can ask for an extension to ask for more time for members to be able to receive that document. Because if they don't have it, they're not able to prepare those documents. So the allocation of profits or losses, that's a reserve fund. That's also part of the tax structure when we close the finances at the end of the year. We have to allocate the profits or we have to allocate the losses in our capital accounts. So the deadline to present this Form 1065 is March 15th. To show this more visually, to be able to understand this, the client, we provide a service to them or we sell products to them. And so here you see the income when these clients pay us for the services that we provided. Then that money comes to the general operating account that the co-op has. So this money goes into this account and this money is distributed every month. And first of all, it goes to pay for expenses and then it goes to pay in guaranteed payments. So what are guaranteed payments? It's a structure that we've elaborated in order to pay ourselves for the work that we do as workers of our cooperative. As owners, we have the responsibility of paying the expenses for the business to be able to operate. So the first thing is to cover those expenses and then also pay ourselves for the hours that we have worked. So that's what guaranteed payments are. When I distributed all this money that came in, whether it was for general expenses or guaranteed payments, which is another expense of the business, at the end of the year, if we do all this operation, we may have money left over. That's ideally, and that's our profit at the end of the year. And that's where we do the end of year profit allocation. So this goes to the member capital accounts. And also as workers, we're also going to pay income tax for this earnings or these profits and also for what we received as guaranteed payments. So the income tax, so this is the income tax and this is what is we're going to pay every year. And this is paid on the year that we had the earnings, which is different from other legal structures. The taxes are paid when they're generated. Another way that we can use an example to explain this. This is an example of a tax return, very simple, of course, from a annual business income. So the gross income were 125,000 In terms of the expenses that the cooperative had, there were 100,000 in guaranteed payments and $10,000 in office expenses or general expenses. So the net profit for this cooperative that was generated, if we subtract 110,000 from 125,000, was so the net profit was $15,000. So we're gonna say that this cooperative distributed guaranteed payments in the same way. There are 10 people to make it easier to in terms of explaining the addition and subtraction that we need to do. Let's say everybody was working the same and they all received the same payment. Every person would in that case receive $10,000. And then we're also going to distribute, uh, they're also going to receive 10% of this, which would be 1,500 each one. If we take this to the K1, we're gonna see the name of the cooperative. So these expenses on each member is responsible for updating this. If there are any changes, if they change, for example, from an 19, they change to a social security, it's important for the cooperative to be updated on that because this is the information that the tax preparer is going to be requesting. If they change their address, the same thing. If they're no longer doing joint tax returns with their partner, then that's another reason to be able to have to update that information. And I recommend people who are on the administrative side have to keep this registry before the end of the year or at the beginning of January. They ask everyone to update these information and see if anything has changed and then to deliver to the person who's prepared taxes.
So we're looking at this example of what might have happened in a year to, and then this will be allocated to the different members, and this will be reflected on the Schedule K1. It has the individual's information, name, address. You need to make sure that you update this information every year. This is the individual's responsibility to keep the co-op up to date on their personal information, such as their use of an ITIN or a social security number and their address, for example. And then over here on the right side, part 3, it shows how much their distribution is. And often the distributions are done based on the number of hours worked. How much did I contribute to this profit being made? And so each person might receive something different. To make it easy here, I put 1,500 each one. 4A are the guaranteed payments, and then the total in 4C, which could be different. In this case, it's the same. And then down here in 14A, can you see it? So in 14A, in this box, whoops, sorry. In A, it says 11,500. And then why does it say 12,500 in C, in 14C? This is what I made as a worker owner of this co-op. And this is what the IRS, what I would have earned if I did not have to pay operating costs. So if we divided $10,000 in operating costs among 10 people, it's 1,000 each person. And if I did not have to pay the operating costs, I would have earned 12,500. This is completely hypothetical. I have no idea why it's here. I'm telling you this just so that we can understand what's on this form. And then this is the other part that's important. L, which will say it's like your bank, like a statement where the tax preparer puts the beginning of the capital account. It's basically a statement of the amount that was originally in the capital account, the amount that was added or deducted, and the final amount in the capital account at the end of the fiscal year that's being declared. And this is basically what you need to understand on this form. There are some distributions for food, for example, which are not completely deductible, which is ends up resulting in a number that also may be hard to understand. If there's anything on here you don't understand, ask your tax preparer. And then health also. Health care should also appear on here if the co-op is paying. No, the co-op cannot pay for our health care. But if we are generating income that goes to healthcare through the, such as through the Federation, which offers access to health insurance, vision, and dental insurance also, and that might appear on here also. And then the process. We're going to go step by step through the process. First is to close the books for the year. The person in charge of the business's finances, there may be one person in the business, or you may have a bookkeeper who's external, and there's a committee that provides internal support to the business, the bookkeeper. These are the people that are in charge of reviewing everything, and everything that was done on the platform is good. And when I mention that, that means that everything's in the right category. And then this will lead to being able to generate the appropriate deductions. For example, if somebody wants to, for example, if we have an expense and we don't have a category for it, we'll need to add perhaps a new account in the chart of accounts. And this chart of accounts has to be well designed in order for us to keep track of the business's finances. For example, there's direct overhead costs, excuse me. Sorry, thank you for slowing me down. I tend to get off on a tear. Um, so we have to review the categories of income and expenses. And to analyze our business's finances, we have to understand that there are direct and indirect costs. The indirect costs are variable because it depends on the amount of services that we sell. In the, for example, in the cleaning co-op, the direct costs were the products, the um, maintaining the equipment, for example. And so the general expenses are independent and fixed. They are not variable, and they're not dependent on the amount of services that you're selling. Um, Equipment maintenance might vary depending on how much you're doing. So this would be for your tax preparer, for example, your accountant. If you had independent contractors, though that might vary also. Um, so sometimes the independent contractors are part of your direct expenses, depending. Other indirect costs or fixed costs are marketing expenses, bank expenses, or fees, office supplies. So that could increase depending on the amount of services that we provide. And then we have to do monthly reconciliation with the bank, which means that I input all income and all expenses. And then at the end of to the system, and at the end of every month, I either get the bank statement or I get the statement in my program, and I have to make sure that the statement is the same as the totals in the program that I'm using. So this reconciliation is incredibly important because let's say I wrote a check to the tax preparer and then it doesn't show up. Perhaps the person didn't catch the check and it doesn't show up in the bank. That money does not show up as having been paid out, for example. And then there are records of guaranteed payments and early distributions. This is very important also in terms of record keeping. We need to know how much we have, how much we've accrued, how much do we owe, or how much is owed to the business. So these records of guaranteed payments is a general or overhead payment, but the distributions of income or profits, sometimes these may be distributed early for something like a Christmas bonus, for example. So it's important to make sure that all of this information has been properly recorded. The records of capital contributions, credits, and business loans. How much do we owe? How much is owed us? And the professionals that work for us need to help us do these reconciliations and entering this information because it's not that easy all the time. Because it's important to make sure that this information is there for when you need it. We usually, in all states, or usually states do have an income tax, a state income tax. Not all of them do, but generally you would have to pay federal and state taxes. Though in the states without a state income tax, you would just have to pay federal income taxes as individuals. And then we're going to talk about that because people who are members of an LLC must pay estimated taxes every 3 months, every quarter. They need to pay them in April, June, September, and then January of the following year. So we are generating these incomes and we need to pay estimated taxes so that when we get to April 15th of the following year, we don't have to end up paying a huge lump sum. We've already paid most or all of our taxes. And then it is possible to ask the cooperative to pay or send in the estimated tax payments for us if we so desire. Once we have everything okay, we have all the receipts for our expenses. What's important in case of an audit, all expenses over $75 need to be supported by a receipt. These little receipts that you get from the POS machine tend to disappear. And so it's good to take a picture or a photocopy of these little tiny receipts because the writing disappears after a while. In case there's an audit, you need to save all receipts for at least 3 years. So we want the receipts to be in good condition. Again, this is for expenses that are $75 or more. You need to have an invoice or a receipt as a backup. So then once we've got that, we can do the profit and loss statement with confidence and the balance sheet, which is the report of what we've accrued, of what we have, what we owe, and what is owed us.
If we've paid $600 or more during the year, what do we have to do for that? We have to ask for people that have worked as independent contractors to ask for the W-9 if we haven't done it. I recommend that each time that you do it, work with a contractor, you immediately ask them for their W-9 that's already signed. I'm gonna show you afterwards a photo, but it's a very simple form. You need the information from the contractor, how it shows up in the income taxes, their address or the address of their business, and then their social security or the EIN, which is like the social security of the business, and sign that and date it. Those are that's the basic information you need. So to prepare this generation of the 1099s is gonna be done the person who's working on your taxes, or if you're working with a bookkeeper in your cooperative, they might generate the 1099s. Normally, the 1099 miss that have some letters at the end, and these are the ones that receive or that the cooperative or the person or the accountant receives. So what is the purpose of these? They have to generate these and they have to send a copy to the person who you contracted and that you paid $600 or more, and a copy to the IRS. So this is part of the information that we need to uh, communicate to the IRS. So say we paid this person this amount of money. This way the IRS can do follow-up that that person is doing the correct filing of their taxes and they're paying the correct amount of taxes regarding the income they received. After January 31st, there may be fines that may be between $60 to $300 per form. So it's very important to do it before January 31st to generate these 1099s and to send these 1099s. So in addition, after we've done these two steps, we have the other part that we have talked about, the year-end profit loss allocation. And here we have it in a more visual form. We're going to refresh what we talked about before. So the net income of the business would be what remains after paying all the operating expenses, including the guaranteed payments. So what was left over, this was the year-end profit. And if we didn't have a profit, then that would be the loss, the year-end loss for that business. So this allocation, and I always recommend that you have a meeting where you establish this. So first of all, the person and all of you have to agree how you distribute the distributions, how you have it in the operating agreement and in the policy manual. And that has to be in the operating agreement, not only in the policy manual. So according to what this document states, you're gonna allocate in percentages according to the hours that you worked or in equal parts if you decide that way. And this is gonna go to our capital accounts. Where can we review those capital accounts? You can look at them in the balance sheet. That's where our capital accounts are displayed. And so according to this, we generate the Schedule K1. So this is a allocation. This is what we're gonna allocate to each account. So they're no longer in the business cash flow and they go to be in the members' capital accounts that are assigned to each member. So that's what generated here. So what's important to understand here that both the distributed, if we decide to distribute part of their earnings, as well as the retained profits that it's assigned to our capital accounts, both of these, the taxes are paid in the fiscal year in which they're generated. And they're going to be recorded in the respective form K1 or Schedule K1, the guaranteed payments that already arrived to our pockets, but also the ones that are allocated, but that maybe didn't come to our pocket and that we didn't, or maybe we didn't distribute that year. So all this is important. This is paid on the year that the earnings are generated. Another thing that's important is that the percentage of profit distribution, I would recommend that you don't have it in the policy manual, the percentage itself. You might have a policy of reserve and a minimum that you should keep in the cooperative, but the percentage is gonna vary every year. It might be a year that's very good, and we decide that the percentage we're gonna keep is 30 or 40%, and maybe you need it, but it might be that it's not needed, and you're mandated to keep it. So it's important that this be a meeting, that be a decision that's everybody is participating, and that's the way it should be stipulated, that all the members, that the General Assembly is convened to make these decisions, and that you decide what the percentage is according to how things went this year. So that's important to be able to maintain here, not only for us. This is where we could see the distribution is thought that each member has some funds to pay what they weren't able to pay in taxes, or to pay for the profits that they still haven't made in terms of the estimated payments in the year. Or it might be that that could be one part, but you also have to think about the financial sustainability of the business. And that's why we need to save some of this for to a reserve, which could be distributed every other year or every 3 years, and to keep that funds in the business. But it's distributed, so it's still my money. So minimum 6 months of expenses of the business. But sometimes when we're starting, maybe just 3 months of expenses. But the intention is to have that covered in the case of a pandemic. We don't have the we're not able to pay different things, or our clients haven't paid us and we've interrupted our services. So preparation of taxes for the members. This process is very similar in terms of documentation, important dates, steps, and decisions. It's important here to understand that I'm only going to be speaking as a member of a cooperative. I'm not going to be able to answer individual questions on this. So how is this? What does this tax structure look like? As self-employed members of our business, we're gonna file our taxes with a form 1040. That's a number of the form. And as we said, we pay federal and state income taxes depending on each state, and it's the responsibility of each member to pay the estimated taxes. There are 4 dates, and those 4 dates are by trimester or quarterly that we send this payment. So, for example, the first one is April 15th, and that first form should already estimate what you earned in January, February, and March. So we know that's the first payment that we send. And the income, as I said, will include guaranteed payments, the benefits or bonuses that you may have received from the cooperative, and any profits. The retained earnings, you've already paid taxes on those the year they were generated. So we're not going to pay taxes when that is distributed to us. That was already paid on that respective year, and it's distributed every other year, every 3 years, and that at that point it's free of taxes. But when we're talking about profits from the year that we're working, we do pay that on the same year. This is Form 1040 ES, which is the estimated taxes. This can be done online these days. And Maureen, there's a link. Maybe you can share it in the chat. And this is on 4 times a year, on April 15th, June 15th, September 15th, and January 15th of the following year. So it's every quarter, and those are the dates that were also going to be shared in this document. So those are the dates. What do we have to do? A little bit of the same. There are also $75 or more. What you need in terms of receipts, you have to keep your records for at least 4 years. And these costs, for example, what's related to our work as independent contractors, what we do. If the cooperative does not provide uniforms, but we purchase uniforms, that's a deductible expense. The mileage is usually provided by the LLC, and they should have a register of the mileage because this is part of what the provision of services includes. We have to categorize all the transactions that were separating personal and business transactions. All of that should be separate. The house, the expenses, and the expenses of the house, and what I'm doing for myself, the income should be in a different account if possible, because it's very easy to mix things up and to do a whole mess. We hope you can also reconcile each month, look at the bank statements every month. You can also use a accounting software, something like Wave that's free and might not have as many reports, but for an individual, it's sufficient. And there's QuickBooks, of course, also has something on the phone, which is very good to be able uh, to upload receipts, invoices. I'm able to take photos of things and register them easily. That can be helpful. But if it's not the ideal, at least having a notebook or an Excel spreadsheet to be able to maintain how much I'm earning, how much I'm spending, what are the expenses that I can deduce for my business. So, for example, mileage reimbursement includes the expense of gasoline, the maintenance of the car, and this is used by using a percentage by the IRS that says that this year we're going to pay mileage at 0.67. So that whatever mileage you've done are multiplied by that rate, and that's an expense that you should be able to recover. If you work from home, there's also a way to be able to deduce all that. But in general, you should keep all receipts that relate to the business and keep your records up to date. And it's important that if the reimbursement is done by the cooperative, you can't claim it on your own individual declaration. It's one or the other. If the business is already claiming it, you can't also claim it on your individual return.
So to send in your estimated quarterly tax payments, we need to keep copies of the form if you sent it in by postal mail, or a copy of the online receipt if you did it through an online portal. Keep a record of your quarterly estimated tax payments, how you did it, when you did it, and the amount. To do your tax return, you have to have this information to be able to tell the IRS, this is the total tax that I owe, but look, I've already paid all of it or most of it or too much through my estimated tax payments. You also need to gather together all the W-2s if you work as an employee, if you get 1099s, find those. If you're an independent contractor with another business, and your Schedule K-1 for your guaranteed payments and distributions. If you work from home, for example, I'm a consultant and I work out of my home, I am able to deduct the expense of using part of my home. But you have to physically measure the amount of space that you use for your business. There are two important things that the IRS wants. It needs to be regular and exclusive use, and it needs to be the main place of your business. that you're earning the income from. If these two things are true, you can deduct. So for example, I asked my landlord what the square footage of the house is. And then I can figure out based on the square footage and my monthly rent, how much each square foot of my apartment costs me per month. And I can figure out how much it costs to use the physical space or the whole room that I use for my business. For example, in my case, it's 1/5 of my rent. So when I do the calculation, it turns out that I'm using 1/5 of my home for my business. And so I can deduct 1/5. There's an easier way to do it. You can also take a standard amount of $5 per square foot, and then the deduction can be no more than $1,500. So how much tax will I owe? In general, we're all different. It depends on where we are, how many dependents we have, what expenses do we have. If we're students, there's different kinds of deductions that you can add up. So you need to talk with your tax preparer and figure out approximately what the percentage is or the tax rate is. How much you will need to put aside every time you get income to be able to know that you will be able to pay your taxes when the time comes. For example, a single person who has no dependents and no large debts should probably put aside 20%, 25% for taxes. Now, if I have one dependent, 20%. If I have two children, 18%, etc. So you can get a rough idea of what percentage of your income you need to put aside for taxes, and then submit quarterly with your estimated taxes. This table can show you graphically what a progressive tax system is. If I'm single, if I'm a single mom, there are different tax brackets. So if I earn under $11,925 a year and I'm single and have no dependents, I need to put aside 10% of my income for taxes. And then it goes to 12, 22, etc. And this depends on my filing status. If I'm a single head of family, the final column, and then married filing jointly. These are on, and I just share this so it'll give you a general idea of how much money to put aside for taxes. And then this is pretty much the same thing in a little different way. Whoops, here we are. If you're single, if your filing status is single, this is the table. And here's married filing jointly, or yeah. It is very important. I need to tell you this. The transparency law has been blocked again, and we do not have to present that information that's been requested by the IRS for individuals yet, but you need to keep an eye on the news about that because that law may go into effect. So it's good for your co-op to gather that information together for that transparency law in case it does go into effect, or when it does go into effect, the corporate transparency law, or the Corporate Transparency Act. Beneficial Ownership Information Program has not gone into effect yet. So there may be an extension when it does go into effect. You need to keep an eye on the news. And there's links in the chat where you can keep an eye on the up-to-date information about the Beneficial Ownership Information Act. I know this is a lot of information. Maureen, I'm going to stop sharing my screen. Thank you. Here we are. Okay, questions? Kathy. I'm going to ask my question in
So
English.
just to clarify, in California, member managed LLCs as an entity such as co-ops that we're developing, those do not pay income taxes at the state level of California, but they do pay an annual fee, correct?
The LLC doesn't pay annual, income,
Okay.
but it pays a fee.
Okay. And then you mentioned an information return at the federal level. What does that mean in terms of paying federal income taxes?
No, the 1065 is, oh, no sé, estoy respondiendo en inglés, pero en la 10, bueno, it's better in English maybe for you. So the 1065.
Either way is
fine. Okay.
So Form 1065 that needs to be submitted by the LLC to the IRS is only informational. You are not going to, as a business, pay taxes. And to the state, at least of California, you're going to pay a fee. Federally, you need to present the informational return. We earned this much, we spent that much, and it was distributed thus to these people who are members of the co-op. So that's the information that is sent to the IRS through that return.
And I think everything, all the other questions I think were answered throughout the course of the presentation. I had two other ones, just, and they might be quick, they might not. Do you have a template, or is there a template that you recommend that members can use to help them determine their quarterly estimated payments?
As I mentioned, the best person who can help you with this is your tax preparers, because there are different things that need to be considered. I don't have a template, but the estimated amount is the percentage that I put up in those tables.
Can an LLC member who's a worker owner, can they also be a contractor of the LLC or an employee of the LLC receiving 1099s or W-2s in additions to their K-1s?
Mm.
Oh, I had a co-op that I worked with that hadn't filed taxes for years, and they were getting paid like contractors. Ooh, it didn't make any sense. They were getting 1099s, But the K1 gives you the same information. But because you're an owner, it's a different form. But the information, the amount is the same. What you're called is different. So there's not, doesn't, I mean, to send both of them out, it's K1 and a 1099 doesn't make any sense because it's just duplicative work. And a W-2 is for employees if you're an LLC. Now, if you're an S corp, these are the employees, the ones that get the W-2.
Well, we have the role in place for a member administrator. So somebody who has standard hours across the week to maintain the administration and the bookkeeping. So with that owner, in that case, that owner would be an employee. They wouldn't be able to do any contract work.
They have this role in the co-op, but they are a worker owner of the co-op, right? I'm asking you that. Is that so? If they are, they're assigned a certain role, and their payment is stipulated for carrying out that role. For example, I was the general manager for clients of my co-op, and that role had a fixed payment. And I also had my earnings distribution. For example, I couldn't do cleaning. And even though I'm not doing cleaning like the other ones are doing, I have a different role than the cleaners in the co-op, but I don't have a different category. I'm still a worker owner.
Yeah, hi.
Mika.
So I'm wondering, we're a new co-op, and in 2024 we have sort of like initial investment and expenses, but we won't be earning income on sales until 2025. So I'm wondering if we don't actually have sales, if I still need to, for other startup co-ops, if I still need to fill out the Form 1065.
Mm. Eso, sorry, that would be good to ask your tax preparer or CPA, but in general, so if you register your cooperative or incorporate your cooperative in your in the Secretary of State, you should prepare like this 1065, even though you didn't have income. If you had expenses, right, you will have a loss. So it will help you, to reflect that in your personal or individual, preparation. So that's good. It's reflecting, right, that you just started, you didn't have income, but you pay for stuff, right? Sometimes there's some, special cases every year. That's why I'm saying ask the professional, because every year there's some differences, or it might be that because of the inflation, we decided not to charge or not to make them pay any expenses, right? Extra expenses for the startups that didn't have any income, So it depends. So I will ask that to be very clear with your professional. Yeah.
Thank you.
Thank you. Yep, you're welcome.
Hey Dani, nomás quisiera mencionar que tenemos una pregunta en el chat.
Danny, we just want to mention that we have a question in the chat.
Si puedes leerlo.
If you don't mind reading it. If we are a new cooperative, is that the one? Yes. And we don't pay quarterly taxes because we didn't know we had to do it. What do we do do we need to pay a large annual payment or do we need to do something else? There is a fine if I don't pay my estimated taxes, if I don't send this. But if they didn't know, because this is not the only case, since that began, normally the IRS forgives the first year. They don't charge you a fine, but you are gonna have to pay whatever the amount is according to your income and according to your tax situation. If you have dependents or whatever it is, that percentage that's determined based on your personal situation, you're gonna have to pay that on April 15th. So if you had a profit in the business and generated profits, I would lean to distribute part of that as a business in order to be able to support people in terms of paying their individual taxes on April 15th. And if not, I would recommend IRS is going to send the documentation, but maybe generating a payment plan with the IRS. Normally, they could pay until October if they make that agreement with the IRS, if they paid it in different quotas. So I would say those are the things that I would recommend. If the cooperative can support their members and distribute part of the profits without leaving nothing, so keeping some in the cooperative, I would lean to that. But also prepare for next year. So whatever percentage that you generated from profits, you do have to pay that, and those guaranteed payments, the taxes on those have to be paid. So the example I gave before, if I was if I was paid $10,000, if I'm at the 20% of tax, I have to pay that 20% or $2,000. If in addition to that, I had uh, earnings from the profits, I'm gonna have to pay taxes on those earnings. So first, they're gonna have to pay that, but the cooperative can support them distributing part of the earnings to be able to support them with those payments. And the other thing is the IRS has payment plans. So I don't know if that helps. Any other questions or somebody who would like to speak up using the microphone?
Mm, pa-
So can the taxes be deducted? No. In other words, for example, when there's a fee that the LLC pays, that's a business deduction, but I can't deduct my taxes. No. Thank you. I hope I responded or I understood the question. So this would be the last question, but we're gonna share this presentation. So Jay, you have
Yes.
your microphone off.
Hello. Yeah, hi. Thank you so much for this information. I'm curious about exploring accounting software solutions, maybe a little bit outside of this workshop, but I know you mentioned Wave, which looks like a good free solution. I was wondering if there might be like supplemental templates that might exist around the features that aren't covered by that basic software. And then also, we've been looking at, the usual QuickBooks Online, Xero, And then also ran across something called FRAP ERP, which seems like it's way more customizable and might be something that could work completely for a cooperative. And so anyway, we're just kind of in that phase of looking at different accounting softwares. And I'm wondering if anyone has like templates or guidance on how to use either a basic functionality accounting software, or if anyone has created like a more cooperative customized solution.
Mm-hmm. Please see, please, put the last one that you mentioned in, or if you have a link or something in the one that you said that is customizable, in the chat. Freight Therapy, perfect. I do recommend QuickBooks Online. I know Zero also it's a good program. Wave is like a start point, I think. It could be free, doesn't come with all the for example, you cannot connect your bank account if it is free, right? So it's that makes it hard, it's or less automatic, like the process. But Wave is also another one which is not so hard also to. I think QuickBooks is very straightforward, but it needs a training start, something to understand where the categories are, where the chart of accounts are, like where do you put your expenses, like how do I build the chart of accounts, there's some things that if you don't have like some basics on that, you should do, I don't know, they have plenty of training videos in their page, as Zero also, and Wave 2. I don't have extra templates. I do use cash flow. That's a template that I use, like besides what QuickBooks provide me online. I could add some. I have some. If you want, we can share it with the presentation. I can share the templates that I have. Thank you for the question, Jay.
Okay, wonderful. Yeah, thank you so much.
Oh, you're welcome.
Thank you, everyone, to stay for the last hour and a half. We're gonna share this recording afterwards, together with the slides and the resources that we mentioned. I just wanna ask one thing, and I put it in the chat. Please share your comments about the quality of this session and the quality of the interpreting for those who use interpreting, to be able to improve our programs in the future and identify the things that might have been difficult to understand. And thank you for assisting the first webinar of the Federation this year. We're going to have more webinars this year. We're going to look at our calendar and our website. And thank you to all the group here to have made the effort for this webinar. Thank you, and good luck with your taxes and with your co-ops. Bye.